Welcome to Mistine Deep Dive. Today we're breaking down Apple. You know the name, you might own an iPhone. But the question is simple, is Apple stock still a smart buy right now? Let's walk through what Apple does, how it makes money, what's driving it forward, and whether you should put your money into it today. What is Apple? Apple is one of the largest and most valuable companies in the world. It makes iPhones, iPads, Macs, AirPods, Apple Watches, and more. But Apple is not just a product company anymore. It also makes a ton of money from services. That includes things like Apple Music, iCloud storage, the App Store, Apple TV, and more. In short, Apple is a product and service giant that sells hardware once and earns from subscriptions forever. How Apple makes money first. Apple sells devices. That includes iPhones, iPads, Macs, AirPods, and more. These bring in a huge chunk of revenue. Second, Apple makes money every time someone downloads an app, pays for Apple Music, stores data in iCloud, or subscribes to services like Apple Arcade or Apple TV. Third, Apple offers financing and payment plans through Apple Pay and Apple Card. These three combined give Apple one of the most powerful cash machines on the planet. Income potential for investors. Apple pays a quarterly dividend. That means if you hold the stock, you get a small payment every 3 months. It is not a high-yield stock, but it's a consistent one. Apple has increased its dividend every year for over 10 years. It also buys back billions of dollars worth of its own stock. That makes each share you own more valuable over time. If you're investing for income, Apple is more of a slow and steady builder than a monthly cash flow machine. Recent dividend tracker, Apple's latest dividend was just under $1 per year, paid in 4 quarterly chunks. This is a low yield but a reliable one. What matters more with Apple is the long-term share growth and consistent buybacks, not the short-term dividend. Comparison to other investment options, here is how Apple compares to other investment types. Investment type, Apple stock, monthly income, low upside. Potential medium to high risk level, medium. Investment type, S&P 500 ETF, monthly income, low upside potential, medium risk level, medium. Investment type, covered call ETF, monthly income, high upside potential, low risk level, medium to high. Investment type, high growth tech startup, monthly income, none upside, potential high risk level, very high. Recent stock performance, Apple's stock has bounced back and forth between strong rallies and sharp pullbacks. In the last 12 months, it has lagged behind other tech giants like Microsoft and Nvidia. Why? Because Apple's earnings were flat, iPhone sales slowed in some regions, and investors wanted growth. But the company remains extremely profitable and continues to dominate globally. Catalysts for growth. Here's what could push Apple higher from here. First, growth in services. That's high-margin recurring revenue that just keeps coming. Second, artificial intelligence. Apple is expected to roll out its version of AI across the iPhone ecosystem, which could drive upgrades. Third, buybacks. Apple continues to buy back tens of billions of dollars worth of its own shares every year. That shrinks the supply and boosts the price. Fourth, India and emerging markets. Apple is building more factories and stores in India, which could be the next big source of growth. Sustainability warning, Apple is stable but not unstoppable. It is facing antitrust lawsuits and heavy regulation in the United States and Europe. Its iPhone sales are starting to flatten out, and newer tech like AI and spatial computing are still uncertain bets. But as long as people use iPhones, listen to Apple Music, and subscribe to Apple services, this cash machine keeps rolling. Tax considerations. Dividends from Apple are taxed as qualified dividends, meaning they get lower tax rates than regular income in most cases. If you sell your Apple shares at a profit, you'll owe capital gains tax. If you hold it in a Roth IRA or retirement account, your dividends and profits can be tax-free. When should you buy or sell? You should consider buying Apple if you want a mix of growth and safety. You like strong balance sheets and rising dividends. You believe in its long-term ecosystem and new AI features. You should consider selling if you want high income every month, you are looking for stocks that double quickly, or if you think the smartphone market has peaked. Mistine meter rating. Income, 3 out of 10. Risk, 4 out of 10. Simplicity, 9 out of 10. Long-term safety, 8 out of 10. Upside potential, 7 out of 10. Total score, 7.1 out of 10. Is Apple right for you? Apple is not a high-yield income machine, but it is a stable, reliable tech stock with a future. If you want to hold a stock that grows slow and strong, pays a dividend, and holds up in a crisis, Apple is worth keeping in your portfolio. It will not explode like a meme stock, but it also will not crash overnight. Apple is the kind of stock you buy once and hold for years. Final thoughts. Apple has already changed the world once. Now it's entering a new era with artificial intelligence and services that print cash every single day. It's not the fastest growing tech stock, but it might be one of the safest ones long term. If you want quiet strength in your portfolio, Apple still deserves your attention. If this deep dive helped you understand Apple better, like and subscribe. Got another stock or ETF you want me to break down in plain English? Drop it in the comments. This is Mistine Deep Dive, where smart investing meets real clarity.